Right. Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alameen. As-salatu wassalam ala Rasulillahi sallallahu alayhi wasallam. Assalamu alaikum wa rahmatullahi wa barakatuh. And a very good morning, afternoon, or evening, wherever you are, ladies and gentlemen. My name is Azuddin, your MC for today, and welcome to the quarterly Islamic Banking webinar series brought to you by INCEIF University and Dubai Islamic Bank. It is quite a pleasure to have you, everyone, here today. For your information, this is the first quarterly Islamic banking webinar series co-organized by INCEIF University and Dubai Islamic Bank, and we are happy to continue this series well into next year as well, inshallah. So, ladies and gentlemen, for today, our topic is sustainable finance and responsible investment frameworks, and we will be speaking about this topic. The panelists will be presenting about this topic on various perspectives, especially from the Dubai or for the UAE perspective, and also from the Malaysian perspective as well. So speaking of our panelists, today we are honored to have first Dr. Riikka Sievanen. She is the Vice President of Sustainable Finance, Innovation and Regulatory Excellence at Dubai Islamic Bank. And the second panelist is Dr. Noor Suhaida Kasri, the Deputy Director of the Center of Excellence for Applied Sharia in Economics and Finance, or KASHIF, at ISRA Institute here from INCEIF University. Now, before I pass the floor on to our panelists today, allow me to go to some basic house rules. First of all, our webinar today will go for about 1.5 hours, roughly. Where each presenter will be presenting for half an hour each, and then we will open the floor for all questions. I do welcome all the questions, but for our participants, do submit all your questions in the Q&A window below, and then I will try my best to have all the questions answered in due time or in the allotted time at the end of our session today. And I would generally recommend please ask only the hard questions, even though this is our first quarterly webinar series, but I do encourage all the as much participation as we can get. As I always say, when it comes to the webinar series, one good way to judge a interactive webinar is the number of questions or interactivity that we get with our participants. So yes, so we're more than encouraged. We do encourage a lot more questions coming in, but do submit them in the Q&A window, and then we will address them at the end, inshallah. Yes, as more participants coming in, I would like to let's just get straight into it. First to present on the topic of sustainable finance and responsible investment frameworks, please welcome to the screen Dr. Riikka Sievanen from Dubai Islamic Bank. Over to you.
Thank you so much. And also welcome everybody to the webinar from my side. Pleased to be here. So I will explain you how the sustainable finance landscape looks like in the United Arab Emirates. And I will additionally also look into some more international perspectives so that you can get aspects to that. Very briefly, I would like to say that how I've ended up to Dubai Islamic Bank. I've been here for 1.5 years. 1.5 years, and before that I was working for KPMG, where I took care of sustainable finance and responsible investment services. And before that, actually sustainability, responsible investment, sustainable finance, they have been so close to my heart that I even made my PhD thesis or doctoral thesis on the topic of responsible investment with European pension funds. So I'm so pleased to talk to you about this topic, which is close to my heart. And I thought that, first of all, I would just like to explain what I mean with the different definitions in this presentation. I will then explain what has been driving sustainable finance in the United Arab Emirates and how the regulatory landscape has been also supporting the development. There are also other actors supporting the development, such as ESG initiatives, raters, and then, of course, what is happening in practice, what have been banks doing as the key actors for sustainable finance. And in the end, I think that it's nice to finalize with why it really makes sense also from the financial perspective. So just to say on the definitions, if we think about of any company, it can be a bank or it can be a non-financial actor as well. We often talk about a corporate sustainability. And so in this presentation, with that, I mean that it is about how a company acts as a corporate citizen in the society. So it means that how the company takes into account environmental, social, and governance topics in its business. But then when we talk about sustainable finance, so this is more on the portfolio side. You know that financial sector actors, they have a portfolio to take care of. That's their business. So it is about considering these ESG factors in the portfolio, and especially in sustainable finance. So this is something that supports the risk management of the portfolio. A very close affiliate is responsible investment or sustainable investment. And that again, it is a term used mainly by asset owners, such as it could be pension funds, governmental investors, sovereign wealth funds. And in the same way as in sustainable finance, so the key aim is then to consider ESG factors for the benefit of better return risk of the portfolio. And then, of course, I'm talking about ESG in here. So what's then the difference with that? So ESG stands for the individual ESG factors. So altogether, sustainable financiers, such as banks, and responsible investors, such as pension funds, they want to look into the individual ESG factors so that they can better understand how those factors might influence the risk profile of the portfolio that they are having. So altogether, these different ESG factors, they constitute the corporate sustainability of the company. So if these are the definitions, what then actually drives sustainable finance and also maybe responsible investment? Here, when I refer to sustainable finance, I consider that responsible investment, it is embedded by this definition. From an international setting, more broadly, so I believe that it has started more with responsible investors, at least in the European setting and in the US. So with those cases, it has been completely voluntary. So this is where values in particular, they have played a role. In the same way as with, for example, Islamic banks, there are Sharia-based values. So responsible investors in Europe, in US, they might have also had values based on which they want to constitute their portfolios. Then, of course, when we talk about financing or investing, so it's really important that does it bring financial value? So if there is no assumption on this, if it is only, let's say, giving money away, but not willingness to see what the financial return is, then it is called philanthropy, zakat as well, right, in Islamic setting. And operating environment is the third layer or driver that I would like you to remember from my presentation. So the operating environment, so it of course comprises of many things. Key things are of course authorities, regulations, what are required, but also, for example, ESG raters and initiatives. And now, if we think that this is the, let's say, model, how we look into the drivers of sustainable finance, now I'm deep diving back to United Arab Emirates. How does it look over here? So first of all, I think that it has been, in particular, the operating environment that has been catalyzing the financial markets to go more sustainable. So we have seen that ESG has become part of financial sector regulation and guidance. Banks in particular, so I'm focusing in particular on banks in this presentation. So they have also noticed that ESG ratings, so they are something that play a crucial role for the bank's reputation. So ESG raters are external actors that are measuring the corporate sustainability of banks, but of course also of companies in other sectors. And then those ESG scores, they again then matter for investors who look into these individual ESG factors. So this is a big thing. Also, operating environment driven by the regulation, ESG becomes incorporated into financial institutions' business strategy, products, and services, of course, also as part of risk management. And in this way, it seems that the sustainable finance, corporate sustainability more broadly, it is becoming like almost like an ecosystem serving the different stakeholders that look into it from different angles. With the sort of like drive from the regulator, banks, investors, also other companies, they have noticed that it makes sense. Let's also become members or participants to different ESG initiatives. So on a voluntary basis. So it is not only something that the regulator asks, but there's also the awareness that it is actually something that is good for our business. And overall, why it is? Because it makes sense from the business perspective. Then if we look into the financial side, so I mentioned that that's important. So overall, of course, the key aim for banks and financiers, it is to understand and to make use of ESG in the way that it serves the management of ESG risks in the portfolio. So the key thing for banks is to ensure or to understand that are there any factors that might be barriers for the company or for the person who is getting the finance from the bank, that are there any barriers that might impact the ability of the client to pay back the finance for the bank. So this is the key concern or key, let's say, concept where banks operate with ESG. So this is how banks look into that. This is slightly different to responsible investors who are also maybe then looking into the upside, which means that what are the opportunities that ESG factors might bring. And let me just give you a brief example to concretize what I mean. If there's a company operating in a flood-prone area, all the operations are in a flood-prone area, there's a flood. So then, of course, the bank would like to understand this, do some climate, for example, stress testing, to understand that if there are floods that impact this client's business, if the production facilities are underwater, so of course we all know that it means that then the company is not able to operate, right? So it will impact the company's business, turnover, and ultimately also maybe its ability to pay back the finance for the bank. Then again, maybe an example from responsible investment on the upside or the opportunity side. So investors typically, they might be very interested in knowing that if there are some ESG trends that might support the company's business case. So for example, renewable energy, if it is a traditional fossil fuel, let's say, oriented energy company, then there might be investors might be willing to see that, okay, maybe it will create value for future if that company will incorporate renewable energy options into its business strategy, will sort of like redirect its business case towards more sustainable options, because it seems that it is embedded in everything what we do, right? The society is changing. The regulators have already bought the idea that this makes sense. There are regulations in place, etc. So this is why investors also want to see that what are the opportunities that then maybe at the time that they want to exit from a particular investment. So then at that moment, maybe they get a better price for the investment than what they did at the moment of investing. And what can then be also said from the financial profit perspective? So definitely there is more research from the responsible investment side, but worthwhile to say that this has of course been a topic that academics have been widely interested in. Does it make financial sense to invest in a responsible way? And I can tell you that in the history, there were also a lot of studies maybe focusing on very narrow ESG funds or certain time periods, maybe certain geographic areas, and then showing that, okay, it doesn't make financial sense. But actually, throughout the years, it's worthwhile to say that the very majority of academic studies find that responsible investment performs at least as well as conventional investment. And there are also studies that show that it actually brings better return. Of course, now you may think that why is it then, if it doesn't bring better return, why should then make the effort? Something what the studies may not reveal is that what is also the impact on the risk management side of those investments. So those studies haven't been normally looking into only the level of return, but researchers are always, of course, limited by the data that they have and public data sets if they do that kind of research. So this is also why maybe not all the aspects have been looked into so thoroughly. And then finally, on the drivers, based on this model, what you see, I would like to touch on values. So what are values, first of all? So they are guiding principles in the lives of persons, so any of us, but also for organizations. And they are normally quite stable. They don't change every quarter or every year, maybe not even every 5 years. But if we look a little bit to the history, we can maybe then also notice that environmental values, they have become more important recently, right? I can also say from the international perspective that if we talk about environmental protection 30 years ago, 40 years ago, maybe that was something that was also like a niche amount of researchers that were interested in that. It was maybe like meteorologists, etc. From the companies. It was, of course, important to say that we care about the environment, but I'm not sure if the actions were really there, right? So if we compare the situation now, hardly anyone says, any organization, any person, that they don't care about, for example, climate change. Everybody knows that it really matters. There's a cost for that. It's impacting a huge amount of people's lives in certain areas. We also know that maybe for the ones of you who have children, children may learn this at school. They also want to tell their parents that we need to recycle, etc. So it is coming from all aspects. And here we again go back to the operating environment, right? That it is the schools, it is the universities, it is the employers that teach and require ESG factors to be taken into account. So now you have learned what drives responsible investment and sustainable finance more on a general level or internationally and in the United Arab Emirates. And I would now like to look into the operating environment more in detail. So to the regulatory landscape and how that has impacted the country. First of all, so it started early 2020 with voluntary ESG disclosure guidelines for companies. But very quickly, that was then made a mandatory requirement for publicly listed companies. At the same time, there were also guiding principles on sustainable finance. Then when these first steps had been taken, there was the COP28 meeting in Dubai in November 2023. And in that event or meeting, all the banks, they pledged for 1 trillion dirhams on sustainable finance. That's approximately 2.72 trillion US dollars. So then, of course, that has been a huge catalyst, right, for sustainable finance in the country. So after that, we have seen many regulations coming. So the central bank, then the ESCA, so Securities and Commodities Authority, they have been very active in publishing new regulations. And in this way, the country has been actually catching up very quickly the actions that were taken, for example, by the European Union already earlier. So we have regulation for sukuk and bonds, also for Islamic finance. So it is the higher Sharia authority of the central bank. So they have a dedicated regulation for Islamic financial institutions. For the risk side, principles for effective management of climate-related risks. And also ESG disclosure framework for Abu Dhabi Global Markets. When we continue, principles for sustainability-related disclosures. So this is again related to or giving like more advice on how sustainability reports should be produced, what kind of disclosure should be said for ESG products. So a little bit like preventing greenwashing. And the newest one is the climate law, which requires that companies report on their scope 1 and 2 emissions, so on their carbon footprint. And how does this then serve financial institutions like banks? So the key idea here, of course, is that then when companies across sectors report on their carbon footprint, then banks and investors can make use of that information when they're analyzing their portfolios. So in that way, the regulator has created like a nice and smart loop for sustainable finance and responsible investment. And now what we are looking forward to is that if there will be a UAE taxonomy. So taxonomy is a classification system for what is sustainable, already present in many countries and areas. So it is then the key aim of the taxonomy in many jurisdictions. So it has been to sort of like to provide the common language for what is sustainable, because otherwise different organizations interpret it in different ways. Okay, so this is how it looks in the UAE. I also mentioned as part of the model that you saw, the 3-layer model, so as part of the operating environment, that ESG initiatives have also started to play a role. So, and what is then that, why do different actors go for these different initiatives voluntarily? So I mentioned that it's of course because they think that it makes also business sense. They have noticed that ESG factors, they are something that everybody wants to incorporate into their corporate daily operations. I often like to say that it is like bringing ESG as part of the DNA of companies. So this is also what we see happening, not only internationally, but here also in the UAE. And another thing what sometimes I'm using, and maybe it's worthwhile to say it also here, is that if we think about digitalization, so tens of years ago, maybe there were only some departments in some companies that had computers. Maybe it was only some colleagues using computers, right? But little by little, those computers have come and digital systems, they have come to every department. Everybody knows how to use them. So the same is the case with ESG. So we are coming from like specialized ESG experts and departments more and more to the fact that there are dedicated ESG resources across different departments, and everybody knows at least the basics of what ESG means in the organization. And in this way, I think that also the ESG initiatives play a crucial role. So maybe familiar to many of you, UN Global Compact. This is the leading initiative for corporate sustainability globally. So many UAE banks have already become participants of that. For the banking sector in particular, there are principles for responsible banking. For investors, principles for responsible investment. For insurers, there's also an initiative called Principles for Sustainable Insurance. Here in the UAE, that hasn't yet become popular, but that also exists. And then often forgotten or not really like put forward to, but what I think that really plays also a crucial role is the Sustainable Stock Exchanges Initiative. And that initiative is something that brings together all the stock exchanges globally that have taken ESG actions. So what we are then seeing that from those web pages, if you go, you can have a look. You can see per country which stock exchanges are members of that initiative and what are the ESG actions that they have taken. And I'm glad to see that I just put here a few of the measures that they have, or ESG actions that the members can explain. That the Dubai Financial Market, which is the stock exchange here in Dubai, and Abu Dhabi Stock Exchange, so they both, for example, have ESG reporting as it is a requirement for becoming a listed company in these stock exchanges. Both of them have also written guidance on ESG or sustainability reporting. They offer related training, and they also have it mandatory that listed companies must have at least one woman on the board. Mainly, of course, the focus is here that the empowerment of Emirati women, and this is also driven by regulations in the UAE. But I think that it is quite nice to see that stock exchanges, it's also over there. So initiatives driving also the sustainable finance agenda. I also mentioned ESG raters, and as I've noticed that it has sometimes become, because I mentioned that I was earlier like an advisor. I was working with a lot of like different companies and financial sector. So not everybody always understood that what are these ESG raters and why do they play such an important role. So I would like to underline that let's imagine that we are responsible investors, that we have maybe 2,000 different companies in our portfolio. So I would say that almost no responsible investor or a bank, also with thousands of corporate clients in the portfolio, has the capacity, resources to analyze every company in detail. And this is where the ESG raters play a role, because then their business is that they are analyzing the companies, they collect the data from the sustainability reports, they may make interviews with the companies, and then based on this information, they can also send questionnaires that are filled in, etc. And then based on this information that they have, they are then preparing ESG scores that they are selling to investors in particular, but also for banks. And so then these ESG scores that are being sold, so they actually form the entire basis for a bank or for an investor to assess that if the portfolio looks like they want it to look like from the ESG perspective. So these determine how the portfolio looks like, if it looks like in the way that the investor or the financer wants it to look like. So if the company's profile is not good, then the bank may want to take additional, let's say, measures, maybe providing more expensive finance because they consider that the client is more risky from the ESG perspective. Or investors may decide, for example, that, okay, let's be active owners and let's address these things because they are so badly taken care of in that particular company. Or investors may decide that, okay, let's just exit from this investment. So these are very powerful players in the market. And so from this slide, you can see that overall, everybody is having their own methodologies, but one can maybe say that overall there are, let's say, fundamental raters. They collect market data and then put like a general rating together, if one can say so. There are many raters that do a really comprehensive assessment. So it is almost like scanning the companies from the, from the toe up to the head and vice versa, and also then horizontally. So you get all the measures, and these are then something that investors really want to decompose and look into every component. Then we also have some other raters that focus maybe CDP on environmental information, GRESB is more for the real estate sector, etc. So these are something that definitely play a role in the UAE as well, because it is the leaderships of the companies and banks, the boards of companies and banks that have realized that these really matter. We want to take action that we get good scores. But then let's go to sustainable finance frameworks and issuances in the UAE. So I mentioned repeatedly that financial or sustainable finance, responsible investment, of course, it also needs to make financial sense, right? For banks, it is a tool to manage risks because there are costs if those ESG risks materialize. For investors, it was also the opportunity side. And for the regulator, we had many regulations like you saw. For the regulator, all these regulations, they also are a tool altogether to direct capital to more sustainable practices, to more sustainable companies. And in the same way, the sustainable finance frameworks by the UAE banks, they are sort of like focusing then on the more sustainable businesses or more sustainable projects. And what kind of frameworks do we have in the market currently? So I can say that the very dominant model is the so-called, I just say traditional sustainable finance framework, which is the so-called use of proceeds framework or asset-based framework. So meaning that if the bank is having an environmental category, for example, clean energy, so then in the clean energy, you may have other, let's say, subcategories like solar energy, for example, or wind energy. So those are like real assets, and they also fit very well Islamic banks because it is like asset-based. It's something very concrete. And overall, so this framework, maybe I'll put it like this. Next to that framework, there has been another type of framework coming popular now in the market. So DIB was the first Islamic bank to launch the sustainability-linked finance facilities financing framework. And what does that mean? So that framework is then again, it is not asset-based, but it is linked to ESG KPIs. So then the clients' finance facilities that we are financing, they have to be linked to ESG KPIs. So this could be, for example, scope 1, 2, and 3 emissions, just to give you an example. And I would still like to say a little bit that, just to make it very clear that when we talk about these frameworks and issuances, what does it actually mean? So an issuance, if a bank or a company outside the financial sector if you make an issuance, a bond or a sukuk for a financial organization, so for an Islamic organization, so it means it is a form of finance. It is an instrument through which you are getting money for your use from multiple investors. So you launch it, you issue it, and then many investors can invest into that instrument. So this is different than if you go to a bank and you ask for a bank loan. So then you know that the bank is giving the loan, but if an organization makes an issuance, so then you have several providers of finance, right? And if the issuance is then sustainable or sustainability linked, so then that's sort of like governed through the framework that one is having. And then those framework categories or KPIs, so they are the ones that actually explain that how the bank or the issuer, if it is an issuer from another sector, is going to use the money that it gets from the market, right? So now then again, the banks here in the UAE, so through these frameworks and through the issuances that they have made, so then they are providing sustainable finance reporting, right? And in that reporting, they are explaining that how did they actually allocate the issued amounts, right? You can see that all the banks, they are well on the way to go towards the 1 trillion dirhams or US $2.72 trillion that they have pledged as part of the COP28. So we have a lot of issuances, more are coming, and I think that banks want to focus more on sustainable and sustainability linked issuances more and more. Well, then just to say that in the end of my presentation that I would like to say that or repeat the fact that ESG makes financial sense, right? What are then banks getting from this? I mentioned that hopefully better risk management. This is hopefully the case and for sure the case. But just to establish that what are then the ESG risks? Are there such in the market? And I would like to say that I like to follow the World Economic Forum annually publishes the Global Risk Report. And I've been observing that already in many reports, the global risks that are ranked in this report, so they have been very green, meaning nature-based. Now in the latest report, we are seeing that there are also other colors coming, which mean that then it is other kind of risks. So for example, technological risks or geopolitical risks. We all know that there have been changes in the geopolitical aspects globally in the recent years. So despite that, the global leaders across the world in different organizations who have responded to this survey based on which these figures or information or these results come from, they are still ranking that climate-related things are the key risks. So extreme weather events and pollution, for example. And if we look into 10 years, how does the world look like in 2035? We are seeing that all these experts who have responded, they still consider that the top 4 for the time being, but let's say that 5 out of 10, what are listed over here, 5 out of 10 risks that are listed over here, they are environmental. So it really makes sense to act on those, to have sustainable finance frameworks, focus the capital more on sustainable projects, sustainable companies. And as I'm a researcher, of course, I also like to, a researcher by education, I also like to look into some research results. What I'm observing is that the cost of capital is lower for companies which have leading sustainability practices. So this is now overall. It doesn't mean that the cost of capital or it is easier for banks only, but this is in general across the sectors. So this means that then when those companies, for example, come to the banks in the UAE, they say that we want to make a renewable energy project, or we want to make a clean transportation project, or something like that. Then banks with established sustainability practices are likely to be willing to give a cheaper price for the finance because it is less risky for them. This is at least what the academic research shows. And another positive finding to finalize my presentation is that high ESG scores, so these were the scores by the ESG raters that we talked about, and also leading sustainability practices. So they are actually connected to, I just say, financial well-being of the companies. So overall, companies that take good care of their corporate sustainability, it can be seen in their financial results. So I hope that this is something to think about for all of you. And so greetings for everybody from Dubai. Thank you so much.
Thank you very much, Dr. Riikka, for that very thorough presentation on sustainable finance from the UAE and perspective, as well as from Dubai Islamic Bank's perspective. Ladies and gentlemen, as I mentioned, just to recap again, please do submit your questions in the Q&A window. We do have a few questions already, but we will reserve that towards the end of our session, inshallah. So on to our next panelist, where she will be presenting on excuse me, she will be presenting on the sustainable finance and responsible investment frameworks and how Malaysia is integrating the Islamic finance with ESG in meeting the national sustainability goals. So ladies and gentlemen, please welcome to the screen Dr. Noor Suhaida Kasri. She is the Deputy Director of and Senior Research Fellow at the Center of Excellence for Applied Sharia in Economics and Finance, Kashif, here at ISRA Institute and INCEIF University. Over to you, Dr. Noor.
Thank you very much, and very good day to everyone. Bismillahirrahmanirrahim. Thank you for your kind introduction, and thank you, Dr. Riikka, for the very interesting presentation you had over there. Okay, within these 30 minutes, inshallah, I'll be presenting on the sustainable finance and responsible investment framework, but looking from the Malaysian perspective to see how Malaysia integrates Islamic finance with ESG, thus meeting our national sustainability goals. Okay, I hope you can hear me well.
Yes, loud and clear.
Right, thank you. Now, so my talking points will be throughout the discussion. What I'll be showing is to show why sustainable finance and responsible investment matters now, and to show how that relates to Maqasid Sharia as a backdrop, and to highlight to you the frameworks, the related sustainable frameworks that is in operation in Malaysia. For example, value-based intermediation (VBI), debt for Islamic banking sector, and also sustainable responsible investment (SRI) for our Islamic capital market. And also I will touch on some policies, taxonomies, and reporting, and also to show how this policy has been implemented and facilitating the growth of the market, our economy, and also to share some challenges and opportunities and recommendations. Yeah. Now, as far as Malaysia is concerned, we are faced with two big risks. The first one is the climate risk, the climate challenge. Okay, I think this is well known everywhere in the world, where temperature is rising, is increasing by 0.19 Celsius to 0.30 Celsius per decade, and you can see frequent increased flood, climate damages, adverse impact, okay, on the environment, on the country, which alone can cause the country annual losses of over, for Malaysia, over 400 ringgit a billion, okay, if over 100 years, if it's unmitigated. So this frequent adverse climate change will definitely devastate your country. Now, the second risk, and also one thing that there's many reports that come up with the finding that the funding gap for Malaysia alone, we need about 375 to 415 billion US dollar, which is equivalent to more or less 1.85 ringgit Malaysia trillion, to come up with energy transition and adaptation to sustain to make our country climate resilience. Now, the second risk that we are faced with the economic needs, the dire economic that is facing our country. Okay. Now, though Malaysia is a developing nation, but we are faced with financial inclusion gaps, okay, B40s, low income, though government through Islamic banks and also other financial sectors has come up with quite a number of instruments, solutions, but that's not enough, especially when there's climate change happening, okay, these events, it really affect the vulnerable economies, which is the bottom 40s of the economy, the low, the underserved, unbankable communities. So that's what we are talking about. So of course, we are also faced with the challenges, funding challenges faced by the SMEs, micro SMEs. For micro SMEs, they constitute 97% of registered companies in Malaysia, and they contribute 38% to the national GDP. However, despite their economic importance to the economy, to our nation, but when you look into the funding of this sector, it only accounts for only 2% of the fundraise. Okay, so that shows that how big the gap is. And also at the same time, there's another critical need that is needed by the Malaysian is affordable housing needs. Okay, so these are the two. We have many risks, but these are the two among two big risks facing our country. Okay, next. So now with these two big gaps, two big risks. Now, how does Islamic finance play this catalyst role? Okay, in meeting in meeting this funding gap. Okay, how did we do that? So the next slide will show how we did that. Okay, but before we show that, it's very important to emphasize. Okay, why sustainability, ESG, ESG, SRI is very important. Because why? Because Islamic finance, the crux of its existence is based on Maqasid Sharia. So what is Maqasid Sharia? Maqasid Sharia is the higher objective of Sharia, Islamic law, where to be claimed as part of Islam, to be claimed as meeting Islamic requirements, there are some prerequisites that you need to meet. For example, under Maqasid Sharia, there are 5 core protections that needs to be met, especially for Islamic banks when they come up with their products. They are, besides making sure that it's Sharia compliant, is halal, the financing is halal, the business is halal, they must also ensure that their business, their operations, their activities, their product, their services meet these 5 higher objectives, which is protection of religion, protection of life, protection of intellect, protection of lineage, and protection of wealth. So if you can see the diagram on your left, okay, where we talk about sustainability and even United Nations SDGs, Sustainable Development Goals, we are more or less connected, okay? Because for Maqasid Sharia, we are also catering and attending to the 17 goals of the SDG. However, the big difference between Maqasid and SDG lies in the protection of religion. Okay, if you can see clearly on your screen, on the left side, the diagram that shows that while we have this connection, protection of life, protection of intellect, protection of lineage, and protection of wealth in this SDG goals. But when it comes to protection of religion, there's no linkage. Because why? Because for Islam, they are values. Okay. When you speak about values in Islamic law, in Islamic finance, we have values that has been ordained in the Quran, in the Hadith of Rasulullah Sallam, in the Ijma ulama. So these are what Islam or Islamic finance must attend to. Now, when we talk about values, we have three for the purpose of this discussion, because we talk about sustainability. So there are three important values that we can speak about and touch briefly. Number one is Khalifatul fil ard, which means that we are the vicegerent, the stewardship on earth. So we have this amanah, this trust given by Allah to make sure that we maintain, we take care of our earth as an amanah. So you're not supposed to destroy the earth. You're not supposed to do anything bad on the earth, but you must take care of it. Okay, and that is part of your religious obligation. It's not just part of compliance, but it's just part of religious obligation. Next, we also have this duty to ensure that our objective of business or our policies or whatever meet the public interest, which is the maslahah. Okay, why? Because whatever we do, we must make sure that public interest is protected. Addressing the climate change, attending to the social well-being. So this is very important, because why? The aim is to ensure the overall well-being of the humanity. Last but not least, because in the context of sustainability, there is a duty of protecting the environment. Okay, so this protection of environment derived from the maxim la darar wala dirar, which is to do no harm. Okay, which this is a very prohibition of harm is very important prerequisites. I think if you can see in taxonomy, especially taxonomy, ASEAN taxonomy, even we came up with our Banegara taxonomy, security taxonomy, do no harm is one of the key important principles in those taxonomy. So that make sure that if you are the financial institution, you must ensure that your capital must be directed to environment that is clean, okay, and diverse from activities that cause harm to the environment and society. Now, when you think about that kind of setup with the key challenges that face Malaysia, and also with Islamic banking playing a key role in trying to address these funding gaps, address this climate change. But in terms of the top-down approach, in terms of the policy making, because why? If you want to push any action in your country, what you need is the policy. What you need is the law. What you need to get is a policy or the framework. So that's how Malaysia Islamic banking sector, Islamic finance sector in Malaysia work well all this while. I think even all countries in the world. So we have, I think as far as Malaysia is concerned, we came up with several series of policies. Roadmaps. For example, in 2014, the Securities Commission introduced a groundbreaking sustainable and responsible investment SRI Sukuk framework. That was very important to spur, which from that SRI Sukuk framework, the first green Sukuk was then launched in Malaysia. Okay, so you will see how the market has grown from 2014 to now. And then 3 years later, the Bank Negara Malaysia launched the value-based intermediation framework that is specialized for Islamic banking sector. Okay, so and in that very year, the world first green SR Sukuk was issued by one company named Tadau Energy in Malaysia. So these are very instrumental in pushing the implementation that drive the movement of value-based intermediation, impact, value purpose-driven investment or sustainable investment or financing in Malaysia. So later, in the same year, 2017, Securities Commission issued guideline of SRI funds, okay, which you start seeing the unit trust issued funds which has wakaf-based, sustainability-based funds for investors in Malaysia, corporate and also for retail investors in Malaysia. And later, you start seeing in the 2020s, more active issuance of policies, by the regulator, by the policymakers, by the market regulators, in ensuring that Malaysia meets the sustainability agenda, net zero by 2050. So we have in 2021, the Bank Negara has issued climate change and principle-based taxonomy, as well as later then Securities Commission issued the taxonomy, SRI taxonomy for Islamic climate fund, for Islamic climate market. And also we have National Energy Transition Roadmap, which plays a very critical role in mapping the initiative in Malaysia in ensuring the implementation of clean energy in Malaysia. And also recently, Securities Commission came up with Makasri Syariah guidance, which is very important in guiding the activities of capital market, Islamic capital market, to ensure that it meets the 5 higher objectives that I explained, including, in addition to that, the protection of environment. And also recently, we also have National Sustainability Reporting Framework, which is a very important. When you talk about framework, reporting plays a very critical role, as mentioned earlier by our earlier presenter, whereby you need more transparency, you need more disclosure, because through disclosure, more transparent disclosure, you build trust. So you will able to minimize and mitigate any greenwashing or impact washing, whatever you call it, okay? Now, because we mentioned about VBI, just to touch on what VBI is all about, okay? So, as from the 2017 when it first launched until now, Islamic banks has implemented value-based intermediation, and value-based intermediation, there are 4 overarching principles or overarching trusts. One is the entrepreneur mindset, where you start seeing banks, Islamic banks started to offer more SMEs, funding to SMEs. As you can see, that SME is faced with a big, huge funding gap. So through VBI, Islamic banks offering more and more scaling up the funding for SMEs. Not only financing but advisory and also facilitating their networking. So the next is community empowerment. So you start seeing that Islamic banks started to offer more community-centric services, okay, even financial solutions. Anything that can address the real needs of the society. Okay, for example, you talk about the asnaf, the micro entrepreneurs who wants to operate a bakery. So you start seeing not only they offer funding to open up a small bakery shop, but also giving them training, guiding them, and until they are becoming no more asnaf, but becoming independent entrepreneurs. Okay, so good self-governance is also another pillar under VBI, which inculcate organizational discipline, self-restraint, to ensuring that they are building more and more, opening up more inclusive, in getting sure that more stakeholders participation. Okay, and also best conduct is to see how banks are starting to change their treatment, especially to their staff, to their employees, and to their communities outside them. They started to be more respecting the human rights, the employment. Empowering the employers to be more knowledgeable, to build their capacity building, and to make sure that they're helping their communities surrounding their business. So you start seeing this kind of movement, positivity in their taking shape in the landscape of Islamic banks. So again, this is a little bit because it has been quite a while. So when it was first introduced, I remember maybe in 2017, people start asking, how does a value-based banking looks like? So they came up with this framework, okay, besides the trust, the one that I mentioned earlier, but they also come up with some vision, okay, what value-based banking should having. One, they have to have impact-based assessment, okay, so to make sure that optimum allocation of resources is being given to the right impactful activities, and also they will visualize a comprehensive measurement to make sure that balanced motivation to achieve short-term and long-term outcomes, so you have to make sure that this can be measured. And also impact focused disclosure, more impact disclosure, because why? This will build confidence to the customer and also to the public. And also constructive collaboration. You have to build more collaboration, not only just among banks and among the customers, corporate customers, but also to the surrounding, like NGOs, government agencies, societies, because through this collaboration, strategic collaboration, you get to understand what are the problems on the ground and how we attend it, and eventually you'll be able to meet the national agenda of addressing the funding gaps and addressing the climate change. And also we have inclusive governance to make sure that the expectation of the stakeholders align well with the business focus. So a part of the under VBI, the Bank Negara, together with the industry players, has come up with several documents, okay, or guidance to guide the Islamic Bank in how you can implement value-based intermediation in the banking. So they have VBI implementation guide, they have VBI investment and financing assessment framework, which is very important because this actually and from value-based intermediation investment and financing assessment framework, they built several sectoral guides, okay, because right now banking, not just banking home financing, but they also need to make sure climate related information, climate related risk management is embedded within the business and the banking activities. So sectoral guides, for example, on transportation, on the manufacturing sector, on the agriculture sector, are now embedded in this VBI sectoral guide to make sure that banks are guided how do you embed this risk, and also they're planning to build a VBI scorecard. But now what Malaysia has is a value-based intermediation for takaful scorecard, which measure with certainty the implementation of maqasid syariah in takaful operations. Okay, just to show you where we are since 2017. So every year since 2020 until last year, 2024, VBI report is being produced, okay, to show the progress of VBI initiative, how the market has grown. So you can see for this, because this is the latest current information that we could gather, the net zero incomes to net zero and green financing asset from 2022 to 2023, you would see they keep growing. In fact, in 2023, the Islamic Bank has intermediated 216 billion ringgit Malaysia through VBI activities, okay, which impact nearly 8 million accounts across financing, investment, deposit, and social instruments. So you start seeing that to make sure that Islamic Bank can actually address the social needs of the community, the micro entrepreneurs, the asnaf, the micro SMEs. So you start seeing the blended financing is implemented. So this blended financing is part of the VBI. So this growth represent you will see from, if you go to the VBI report, you start seeing the continuous growth shown in the VBI. So in fact, from 2022, the growth from 131.63 billion, there's a shows of 64.15% increase in value and 61% increase in outreach. So you can see more and more Islamic bank adopting, because VBI, for your information, is not compulsory, it's voluntary initiative. So the Bank Negara has yet to make it mandatory. So because why? Because I think they wanted to see how can we take off this value base, because banking is still a capitalist engine, right? But how do you build value in it? Okay, so they wanted to see how they can grow. So you can see there is a gradual growth in this VBI, and so this is as far as the VBI market is concerned. Now, I mentioned to you about SRI, Sustainable Responsible Investment. That is a framework for SRI Sukuk framework that was issued by the Securities Commission in Malaysia. So you can see there are three key sectors, key segments. Okay, first the key segment is green. Okay, it was 2014 framework. Okay, when the Securities Commission already feel that we need to ensure that our market, our investors, our issuers, all are driven towards sustainable and responsible investment. So you can see the green is giving more areas that can be covered under green, so-called green investment projects. And then also you start seeing social projects also included, where you need to have affordable housing, employment generation, and also Securities Commission also wanted to develop wakaf, okay, because as far I think most of Muslim countries in the world, we have a lot of wakaf properties, assets, so which face with funding gap. So this is so what Securities Commission did was to incorporate a provision for wakaf development as part of SRI project. Now, let's go to the core framework. Now, when we talk about framework here, I will touch on three key areas. One is the reporting and disclosure. The next is capital mobilization. And next is the classification and taxonomy. Now, when you talk about reporting and disclosure, Brother Aizuddin, you have to tell me how many minutes left. Okay, I think I can go as long as I can. Okay, all right. So, right. Okay, so when you talk about reporting and disclosure, especially on sustainability, is something that how Malaysia started. We started with not making it mandatory for reporting. Okay, but now we are making it mandatory. Okay, so Malaysia through Securities Commission, they came out with this NSRF, National Sustainable Reporting Framework. You can see on your right. Okay, where knowing that is a complex exercise. Okay, not everybody can do this reporting, not everybody know how to do it. So what the government, what the market regulator is doing is to do it gradually, phase by phase. So for this year alone, for this year, starting from this year, you can see the main market, the companies that is listed in the main list in the Bursa Malaysia is being made is now must report their climate related data, climate related information in their reporting, must include it in their financial reporting. So that is starting to build. Okay, now they but before that, it's not that they just put it 2025. No, before that there were already measures, there were already steps taken slowly, where this company that are listed in the Bursa Malaysia has been guided to publish and issue sustainable reports. Yeah, so they have actually built some capacity in doing this reporting. So once they have reached certain maturity, so it's about time is made compulsory. Okay, so you can see later they will issue other group like ACE market. Okay, so slowly you can start seeing that the compulsory nature will start building in the next 5 years. Okay, I'm not go into deeper, which I think I'm not going to have much time. Okay, but however, it's very important to see that this reporting aligns very well with our Maqasid Sharia guidance, okay? Because with this disclosure, you can start to show your humanity, justice, transparency, and accountability, especially to showcase your environmental stewardship as a moral and ethical imperative, yeah, especially on the shoulder of the board and management. Okay, I'm not going to go detail about this. You can have this slide later, and then you can read it through. So this is the part of what NSRF is all about, to make sure that climate-related disclosure is covered, and it's informed and is reported. Okay, that is especially scope 1 and scope 2, and also this is also through this way we can build capacity. We can build the capacity of our corporations. Yeah. Now, besides, as you know, corporations, and they are listed in the stock exchange, of course, they will have the capacity, right? They have the money to even hire specialists, experts to do reporting. But what about SMEs? Okay, SMEs, they don't have that kind of financial economic prowess to actually do that, you know. So what a Securities Commission has done is to come up with a simplified version of ESG disclosure guide, yeah, to give a very simple, straightforward, yeah, 35 disclosures mapping across ESG, and then to guide them how to support your data for your value chains. You know? So this is very interesting. If you can take a look, it's very interesting because they categorize to basic, intermediate, and advanced level to cater for the maturities. So because we are aware that not only corporations that will be faced with this pressure to make sure that they are sustainable, ESG-driven compliance, but we also must make sure that our SMEs are also equipped with these skills, yeah, because of the import-export thing. Of course, when you export or when you export your goods to other countries, especially Western countries, they are very strict with ESG, they are very strict with sustainability. So we have to make sure that our local corporations, SMEs, players are equipped. Okay, now I have mentioned to you about the blueprint. I have mentioned to you about the frameworks. Okay, but how does this framework make any impact on the ground? Yeah, does it make any money or generate income for the country? But as I mentioned, Securities Commission has launched this SRI Sukuk framework in 2017, and you can see earlier on how the growth in the left side of the diagram, you can see cumulatively SRI Sukuk have surged from 10 billion ringgit Malaysia at the end of 2021 to 43 billion ringgit Malaysia by the end of 2024. That shows the strong market and investor demand for these instruments. Okay, more and more you start seeing that there are more and more interest in supply and demand of sustainability tools. Okay, especially when we talk about SRI Sukuk. Now, besides that, okay, it's very important for me to also, because there's a lot of frameworks in Malaysia, okay, but it's very important for me to mention the instrumental frameworks which has spurred the growth of SRI. First, we have Securities Commission SRI Sukuk Roadmap, which build 5 I strategies. So these strategies is very important because they give this kind of direction that you have to enhance 5 strategies. One is that in the SRI instrument selection. Second, you have to expand SRI investors base. And third, you have to establish a strong SRI issuer base. And then you have to instill strong internal governance. And 5 is the data, designing effective information architecture. So you start seeing that this has started to operationalize, implemented throughout the Islamic capital market. But of course, the Islamic banking is also supported by a very important framework, which is Bank Negara Financial Sector Blueprint, that makes sure that keep pushing and pushing for green economy and pushing for a more value-based intermediation economy in the Islamic banking. On top of that, we also government also offer incentives, okay? Because without incentives, there will be no appetite to grow this sustainable economy. So you start seeing there is SRI schools grant scheme, that covers the external review costs, okay, pretty lot, and tax deduction exemptions, okay, that helps to lower the cost of the issuance. And you start to see Bank Negara offering low carbon transition facility, which is to fund SMEs. This is more of transitioning, because we're not talking about just create. We must, because when you talk about climate risk, there are climate change. There are risks that is happening, physical risks, there are transition risks, and also there are legal risks. So transition risk plays an important, is a big risk to Malaysia, especially Malaysia. If you talk about, we are relying on oil and gas production. So how does this oil and gas production business transition to the clean economy, clean energy? So this is where transition facility offered by Bank Negara is very helpful. And also we have green technology financing scheme to help SMEs, especially SMEs, to transition to build sustainable, to build climate resilience. Okay, now I'm not going to touch on this because I think we're limited with time, but it's just to show that this is again VBI financing. You can see net zero financing, though you can see on the left side, the diagram shows not really much compared to social financing, okay, offered by Islamic Bank, but we are growing slowly. So the right side of this debt presentation is to show the case study that our energy, our first scoop, so at the same time, while we talk about instrument, we talk about policies, it's also important for the country, for the government to build the appetite, okay, to build the right investment opportunities, So based on our national energy transition policy, if I'm not mistaken, government, the NETA policy, the roadmap has estimated it will need up to 1.85 ringgit Malaysia trillion in financing by 2050 to support the country's and transition initiative. This will definitely trigger and boost the drive to build more sustainable initiative, and funding, Islamic funding will be part of this tool, to facilitate to make Malaysia move towards sustainable nation. Now, just a quick one.
Dr. Noor, to disturb, we have to wrap up because we have to give space for questions.
Okay.
So if you
All
don't
right.
mind,
Taxonomies. Sorry, dear. Okay, taxonomies, I'm not going to go into that. We have GC3. I hope you can go through it. And then we have these key challenges. I cannot go through it, but hopefully you can see through it and recommend. And what is the untapped potential finance, climate? We need to build more climate adaptation finance, nature-based solution biodiversity, transition finance, social impact finance, and these are the recommendations. I'm sorry I taken much of the time, but feel free to ask any question. Thank you, Brother Izzuddin, and thank you for listening.
thank you very much, Dr. Noor, for that very, very informative presentation. So now, ladies and gentlemen, I would like to open the floor for Q&A. I did write a few questions down, but since there's quite a few questions from our dear guests, I will give the priority to our guests who have been waiting since the beginning of this webinar. So first, for the information of our panelists, Dr. Riikka and Dr. Noor, you can also view the questions on the Q&A window below. But I'll go through the questions, I'll read the questions. So first, Ahmad Al-Mehri, or Mahiri, I'm sorry if I'm mispronouncing your name, asks, can financial institutions truly decarbonize their portfolios and operations without compromising systematic stability? Or are we entering a phase where pursuit of sustainability driven by ESG metrics and rapid technological adaptation introduces new forms of unquantifiable risks that could undermine the very resilience of the financial system seeks to preserve. I believe this question is for Dr. Riikka. So, Dr. Riikka?
Thank you so much. Super interesting and long question as well. I can maybe bring some perspectives from the European Union, where the regulator has particularly stated, so the European Banking Authority, that climate change, biodiversity loss, etc. So we talk about the most common ESG factors, what they are listing, that those are actually considered to be systematic risks. So with this, the authority means that banks should be analyzing what those risks mean for their portfolios. So I hope that I'm answering your question. So basically then the regulator is asking banks to consider these systematic ESG risks that actually then materialize through the established risk classes like market risk, right? Market risk, liquidity risk, etc. So they are sort of like swimming into these risk classes. So the authority is asking that every bank will have an organized approach to these systemic risks. I hope that I answered to your question. And I believe that also the digitalization and digital systems, so maybe not mentioned by the authority, but they definitely are impacting the banks in the same way.
Okay, thank you. He also adds on to, he also asks a second question. As banks increasingly prioritize sustainability over short-term profitability, how can they ensure that financing smaller, lower margin green projects remain commercially viable without creating imbalance in credit risk and pricing?
Yeah, thank you. This is a very good question as well. Broadly, if I take the academic research as the background for this, I can see, just maybe because responsible investment might have more history, so there's much more research on responsible investment and the returns that it brings compared to sustainable finance. And here again, the difference is that with responsible investors, so of course they look into risks, but they also look into the opportunities. Hence, this is how the profit perspective is very valid and relevant. Whereas then for banks, the key risk is the credit risk. And so the banks need to understand how ESG factors, maybe that are systemic risks, how do these ESG factors impact the ability of the client to pay back the loan? Okay, so in this way, actually then banks are making the exercise. It is not maybe, it is the same, it's the same coin, but from the other angle, so to say, to understand that if the client is subject to certain ESG risks, is it possible that those risks impair the ability to pay back the loan? So if we take an SME, you are saying that if there's a lower price, for example, for an SME or even for a larger client, if the pricing is lower, so then the academic research suggests, and the practices that I have seen suggest that then the banks have analyzed that client, they have understood what the ESG risks with that client are, and this is the reason why they are willing to maybe then give a little bit like a cheaper price for the finance. Whereas then for risky clients, then banks are likely to be willing to have a higher price for the financing. Right. So this is like to see how it is. So even then clients who get the cheaper price, which means that maybe they are less profitable as such for the bank, at the same time, they mitigate the ESG risk in the portfolio. So a more profitable client may bring unpleasant surprises because they may be subject to more ESG risks that materialize and then may be very costly for the bank from the perspective that the client cannot pay back the loan.
See. Interesting.
I hope that I was answering the question. So this is the whole idea with banks, that they understand because it's the debt market, right? What happens if I give my money I'm like giving some money for a client, how can they pay it back? It would be the same question that we are posing, that if we are borrowing or lending some money for between ourselves, we may ask, will this person pay it back to me? So the bank is asking the same questions from the client. And I gave the example of a production facility in a flood-prone area, for example. So the bank wants to see that if it is a flood-prone area, maybe it is a risky client. From that perspective, we need to maybe then have a higher price for the finance, because there's a possibility that due to floods, the client may need to stop operations for some time. It means that there's less turnover, then less also money to pay back the loan or the money for the bank.
Right. Thank you. Dr. Noor, you want to add any more any points to that?
Okay, I think because there are quite a number of questions to give justice to the question, the people that has posed some question. If I can, because of the limit of time, I think I will attend to perhaps three.
Okay, sure.
I would start with this question of VBI by Muhammad Arifur Rahman. Thank you for your question. For your information, we have done for the last 3 years, ISRA has come up with a value-based interpretation report, reporting the progress of VBI industry in Malaysia. And the report has been referenced to many institutions, including in fact Vanagara has actually referred to the data that has been shown in the report, because we actually got the real raw data. But to me, in my view, yes, it is progressing well. Okay, it is making a big it is a mega trend, if I can say that, in Malaysia happening, because it's not easy to move banking, Islamic banking, to social nature. It's not. Of course, we have ESG, but what we're talking about social, yeah, like helping the asnaf, the zakat. So I think it is something, a game changer. Whether it can be adapted, VBI can be adapted, yeah, of course, definitely it can be adapted. What needed is the willpower from the top, your regulator, and also the willpower from your player. But of course, if the grassroots demand is there, definitely you will see there's progress. But I think countries like rich countries like GCC maybe more of environment rather than social. So that will be my question. I hope you answer questions. And next would be, can we claim anonymous attendees? Can we claim to practice responsible investment if our financing still fuels consumption-driven sector rather than transformative social impact? I think it is where taxonomy plays a very important role to make sure that, because by taxonomy, you'll be guided in classifying your financing, your business, whether does it meet the benchmark, the requirement, the definition. Then only you can say that, okay, I am this green, or I am sustainable. Otherwise, this can trigger greenwashing. Okay, so this is what we try to avoid. Okay, so it's very important for you to have clear framework defining these practices, and therefore can only you can safely categorize your INCEIF energy, clean energy initiative. Yeah, so the last question, if I can take, is if anonymous attendees, is Islamic Bank were to publish their social return on investment alongside financial performance, how different? I would love to see that. Okay, but recently we took a study. Inshallah, our report will be issued next month. Inshallah, please check our website. The latest report on the state of Islamic climate finance in Islamic banks in Malaysia. Okay, it's very hard. You could hardly find these real numbers showing the social and the real financial numbers performance. I've yet to see any. But I'm not. I don't. I think there must be any somewhere that actually show the social achievement, performance, and also financial performance. But I would love to see. But of course, then we can start studying. Yeah, I might not be able to answer your question, but based on our study, it's hard to find that. Yeah, at the moment. I hope with the interest in the interest of time, I'm sorry I can only attend to 3 questions. Thank you very much. The question was super marvelous. I enjoyed the questions, but I'm sorry I couldn't attend to all. Thank you very much.
Thank you very much, Dr. Noor. Before we close the session today, we do apologize that we couldn't, due to the time restriction, we couldn't address all the questions. But before I let our panelists go, just quick questions. The typical that what we normally get is, can we get the presentation that you shared just now? So Dr. Riikka, Dr. Noor, can we share to our panelists? To our attendees?
Yes, please, by all means, please.
Yes, we will share the deck that you can share. Yes.
Excellent. Yes.
Sharing is caring.
Yes. So after the webinar is finished, what we will do is we will publish the recording on our social media, and then I will also email the attendees of our webinar today, the presentation, as well as for the questions that are unanswered. What I will do is I will compile them and I will send them to Dr. Riikka and Dr. Noor to answer on text, and then I will email them together with the presentation as well, inshallah. So any last points that you'd like to make, Dr. Noor, Dr. Riikka? Dr. Noor first, please.
Thank you so much for this opportunity, DIB. Thank you for offering this platform for us to share our knowledge, and I look forward to see you and I learn a lot from you. Thank you very much.
Thank you very much. And from my side, I would like to thank you both. So very interesting presentation, excellent facilitation done during the webinar, and happy to see so many people online and also all the interesting questions. So we will come back to those. And so please join the forthcoming webinars as well.
Will do. All right, excellent. Thank you very much, Dr. Noor and Dr. Riikka, for your presentations today. Alhamdulillah, I think as I mentioned in the beginning, one way that we normally gauge how good the presentation or how interactive the session is by the number of questions that usually come in during the Q&A session. So Alhamdulillah, thank you very much everyone for joining this quarterly Islamic banking webinar series brought to you by INCEIF University and Dubai Islamic Bank. Just to recap once again, I will compile the questions that were not answered and email Dr. Riikka and Dr. Noor in due time, get them to answer via in text, and then I will compile them and then send them to everyone in our attendee list together with the presentations that you saw today. So with that, I end my duty today as the MC with Wabillahi Tawfiq wal Hidayah. Wassalamu alaikum wa rahmatullahi wa barakatuh. Thank you very much. And also see you in the next quarterly webinar series happening on the 4th of December. Please do tune in to our social media channels on Facebook, LinkedIn, Instagram, and to get updates of our upcoming webinar series. With that, thank you. Assalamu alaikum, and see you next time, inshallah. Take care.